Alright, what's up guys? I hope you're doing well. James here from jamesdforsythe.com. Continuing on with central bank digital currencies, this time kind of talking about like how do you design one of these things, right? Because in the previous video we went over like a bunch of core features that they need, not just the actual currency itself, particularly like the instrument, um, but also like the system it needs, what kind of regulation or authority should be granted into what entities, stuff like that. Now we're going to head right over to the screen share and do more of a like what things do you need to keep in mind when actually designing one of these things. I'll make it bigger for you guys. Hopefully you guys can see that. Again, this is just the PDF from the core foundational principles of whatever the rest of the title is. I'll scroll up at the end. Again, it's a report done by multiple of the developing countries' central banks throughout the world, like the Swiss National Bank or whatever the name of their bank is again, the Bank of Japan, Bank of Canada, the ECB, the Board of Governors for the Federal Reserve, and others as well, right? And so, I think the BIS is in there too, off the top of my head. But anyways, specifically on how you design one of these things, right? And so designing one is, you really have to keep in mind the underlying system, and it's inherently a choice on where and how the central bank should be involved in the national payments ecosystem. And so that's where it really kind of gets tailored depending on the country, kind of how their monetary system is set up to begin with. So there's a lot of things that could go into it. So specifically with instruments, the actual currency itself. So they say there's two fundamental and complementary design features for a possible CBDC. One of those is making it interest bearing rather than just cash like. This is something we have discussed earlier in previous videos, to where it's like it basically is kind of just like physical cash. There's no interest or whatever. On the other hand, it could also bear interest, so it'd be kind of more like a treasury. However, kind of a complement to that, if they do decide to, or if it were to have interest, right, just in and of itself, then they would have to impose a cap or limit on individual holdings to prevent people from essentially just flowing into that away from commercial bank deposits and really kind of pulling a bunch of money out of commercial banks. And that's a major disadvantage that they talk about from their perspective. How much of a, like how big of a deal that actually is, I'm not 100% sure, but that's kind of taken a fine line between what banks do, like do they need your deposits, or do they have enough bank reserves? Like, is that really kind of a can because I don't think you can conflate the two because they're kind of different. One, bank reserves are assets for the banks, and two, are for on the commercial bank's balance sheet. Bank reserves show up on the asset side, and then you have your commercial bank deposits on the right. Um, sorry, on the liability side. I'm thinking I have a picture in front of me when I don't. But anyways, you get the gist. But I'm not going to go too far into that rabbit hole now. That'll have to be a different video. Okay. So noting that interest could play a role in controlling demand for CBDC and facilitate pass-through of interest rate decisions, essentially controlling monetary policy to a greater degree. They could do this by essentially what they would do is bypass commercial banks through the rates, to where if they want to, say, increase the amount of interest that individuals receive, or businesses, whatever, would they could just do it through their CBDC rather than say they want to stimulate or do some form of UBI, universal basic income. Instead of doing a paycheck, maybe they increase the interest rate on that CBDC itself that individuals hold. And so basically the individuals would gain interest from their currency itself rather than having their deposits in the bank and the bank having to pay them. So kind of the central bank would bypass the commercial banking system to put more assets on, non-banks' balance sheets. Okay, and so that also yet designing a CBDC that moves away from cash-like attributes to deposit-like attributes. A CBDC could hasten any disintermediation of existing deposit takers. Kind of one thing I was just kind of talking about, where it's kind of more like physical cash, there's no interest, whatever, or it's more like and transferring it or transferring it to be more like a deposit. It could essentially have more people go to the CBDC, convert their commercial bank deposits into the central bank digital currency, pulling cash or pulling money, liabilities, whatever, pulling liquidity out of the commercial banking system and putting it on essentially the Fed's balance sheet. Um, or any commercial bank, whatever CBDC you're happening to deal with, but if you're an American using USD or Fed coin, whatever, it'd be the Fed's balance sheet, right? Um, so limits, basically putting a limit on how much you could own, how much currency you could actually have, or maybe even a limit on how much you could transfer at one time within a specific time period, whatever the parameters may be. Limits could mitigate such disintermediation, including by impeding a possible run to CBDC during a crisis. But they would also limit the effectiveness of making a CBDC interest bearing. A possible alternative to limits could be a tiering of interest rates by volumes. And here's a paper that they give. Okay. So so you have the currency, but you also have the ledger system, which is kind of, to me, seems more like what the commercial bank system does now. Not even just the commercial banks, but the euro dollar system as a whole. It's more of just kind of a system of ledgers, it seems, to where that's basically all you need is various entities of different, I don't know if I'd say caliber, but various entities throughout the world basically using their ledger and other financial engineering things that they can make up, derivatives, um, as an example, to do whatever they want, right? And so in a CBDC system, a payment is a transfer of a central bank liability recorded on a ledger, right? So in designing a CBDC ledger, there are 5 key factors: the structure, the payment authentication, functionality, access, and governance, right? And so a ledger structure could be centralized, where it's all on the Fed's balance sheet. They have everything, right? They have all the information, whatever. It could also be decentralized. And as an example, they say through use of distributed ledger technology or a combination of the two, right? Excuse me. Where, say, and an example they give is on a centralized ledger that only takes the total or only keeps track of the total amount of CBDC issued, um, with individual balances stored locally. So like on your phone or your cards, they don't know how much you have specifically. Um, that would be another option. So they go on to say a centralized ledger would require an intermediary to manage and transfer the liabilities, making anti-fraud and security features easier to incorporate. Whereas a decentralized ledger could have the potential to make peer-to-peer and offline payments easier. Combination could be developed, but the resulting complexity could create a significant burden on the functioning system, right? And so basically, where's the control going to go? Is it going to be like, kind of more like Bitcoin, where it's like peer to peer, offline? You could just, it's up to you, right? You don't have Uncle Sam looking over your shoulder. Um, Whereas if it's all centralized in the name of money laundering and anti fraud, as always, um, they'll know everything. And that's another thing that they get into later. I don't remember if it's in this specific report, but separate topic, definitely in a different video for the future. So, anyways, okay. So, payment authentication designs would be an example: identity-based or token-based or multi-factor. Will drive the underlying data structure of a CBD system and determine how it will integrate with others. Example, for digital identity verification as part of Know Your Customer or transaction monitoring requirements. Um, and I forget it may be in a footnote somewhere, but there's a very, kind of want to look down. I don't know if I'm getting ahead of myself, but they said something about essentially having a global kind of identity database where it has all of your necessary information as they deem on there on a centralized entity. But at least they go into like say privacy and or not privacy, cybersecurity issues and stuff like that. I'm sure I'll come across it at some point because I remember reading that somewhere, but I don't remember if it was in a footnote or where it was specifically. But like I said, I'm getting ahead of myself. Okay, so a CBDC ledger could serve only as a very simple record of central bank liabilities or incorporate more sophisticated function. As another example, like I said in a few other videos, and I may not have discussed it earlier in this specific one. This is very much so a discussion paper. I think that's what they actually explicitly call it. So I'm not 100% sure. Sorry, wrong way to say that. It's not to say that this is a for sure thing. It's just there is a very significant amount of research going towards it, right? From all over the world. Yeah. Central banks all over the world, international entities, and so on, right? Um, Anyways, they give us that in the very beginning, and I might even be able to find it. I don't remember if it's in the executive summary or what, but I also don't want to spend too much time looking at it because, as I know how important time is, don't want to waste your guys'. So I'm trying to. There it is. A recent survey found that 80% of central banks are engaged in investigating CBDCs, and half have progressed past conceptual research to experimenting and running pilots. And I believe I talked about this in. It may have been one of last week's videos, but it was one of the first ones. If you look at it from a. How did I forget that word? Not consequential. Um, Wow. In a timeline, for some reason that word is completely going away from me. Um, but anyways, chronological. If you look at my videos in chronological order, the last kind of set of CBDC videos, it'll be the first one where I started in this PDF to discuss kind of a general what is. I think that may have actually been the title is like what exactly like or CBDC explained, possibly something along those lines where it's explaining exactly what a CBDC is or a proposed CBDC could be. That's kind of the idea. Basics, what is it? That's pretty much it. Okay. Other designs to keep in mind are incentives, as always, in a quote unquote free, we're going to go market system. Because we don't have a free market 100%. That's completely separate rabbit hole for a different video, different series. There's a lot more to that, but everything's based off incentives, right? Taxes are incentives to do certain things, as an example, so on. That's why the tax code is so complex with loopholes and other things, whatever. I put quotes on loopholes for a reason, not to say that fraud isn't a thing. It obviously is, but separate topic, separate day. Anyways, incentive structures. So directly recovering costs for the public users would be transparent, but could be a disincentive to adoption, right? Because you don't want to charge people to adopt something. You have to get people to actually use this thing to begin with. So just because you make it doesn't mean people will come to use it. So that's one thing to keep in mind. Assigning a public good or seigniorage earned by the central bank could reduce or eliminate the need for charges. Charging service providers would require them to have a viable business model to recover their costs. So it depends. Is this going to be more of a government thing to where it's a public? What is it called? Forget the term for it, but it's like Social Security, just an example. Not necessarily entitlement. That's not where I'm trying to go with it, but it's like a government program service for people. For some reason, that word's being elusive for me as well. Um, but anyway, you have to create incentives if you're going to have it more of a, if you're going to incorporate like the commercial banking system or some other intermediaries from the private sector to begin with, you have to create such an incentive to where they'll actually do it. Maybe even if that's just a massive subsidy for whatever the case may be. They have to be incentivized in some way that'll help them that will help them recover their costs and profit. Else they probably won't do it, right? As it should be. But anyways, finally, decisions will be required on whether all costs are transparently charged through fees and whether these are borne by merchants, users, or both, or if some subsidization through public funding, private cross-subsidy, or allowing access to consumer data is permitted. That's another thing that I was going to bring up. So the cost of actually using and implementing this structure. I mean, it costs to run this thing, right? It's not like, yes, it's digital, but like you have to have the computers, you have to have the infrastructure, you have to have people actually using it. You have to, whatever kind of device, is it on their phone? Is it some specific like digital wallet that they take out, like a flash drive or some variation, whatever it may be? Um, I talk about that later, which will probably be in the next video. Um, on how exactly the technology considerations that are going to be used to do this, right? And so you have to keep that in mind. How are you going to pay for that? Is it going to be all public funding? Is it going to be some kind of subsidy for the private sector, whatever? And also the whole or allowing access to consumer data, um, selling your data off to whoever wants to buy it, I guess. Much like was it Facebook that does that now, or in other search engines. Like advertising, how that stuff works, like Google ads. I'm not as acquainted with Facebook ads. I'm actually not acquainted at all with Facebook ads. I just don't. I never use Facebook.